You check your credit score on Credit Karma, and it says 720. You feel great. You apply for a car loan, and the dealer pulls your credit. It's 680. Wait, what? You check your bank's app, and it shows 705. Now you're confused. You've got 3 different credit scores, and you have no idea which one is real. Here's the truth that nobody tells you. There isn't just one credit score, there are dozens. And the 2 main scoring systems, FICO and VantageScore, can show wildly different numbers for the same person. Today, I'm breaking down exactly what these scores are, why they're different, and most importantly, which one actually matters when you're applying for credit. If you want simple, practical tips like this, tips that actually work for real people, hit that like button and subscribe to Liberty Money. We drop new videos every single day to help you get out of the money struggle and start building real wealth. Let's go. 1. What is FICO? The industry standard. Let's start with FICO. FICO stands for Fair Isaac Corporation, the company that created this scoring model back in 1989. When most lenders talk about your credit score, they're talking about your FICO score. This is the score that banks, mortgage lenders, auto dealers, and credit card companies actually use when deciding whether to approve you. In fact, about 90% of lenders use FICO scores to make lending decisions. That's huge. Here's what you need to know about personal finance management. FICO scores range from 300 to 850. Just like most credit scores. But here's where it gets complicated. There isn't just one FICO score. There are multiple versions. 8 is the most common, but mortgage lenders often use FICO 24 or 5. Auto lenders might use FICO Auto Score 8 or 9. Each version weighs factors slightly differently. This is financial literacy that most people don't have. When you're applying for credit, the lender isn't necessarily looking at the same FICO score you see on your credit monitoring app. This is why understanding money management means understanding which scores actually matter for your specific goal. When was the last time you applied for credit? Do you know which FICO version the lender used? Most people have no idea. Point 2. What is the alternative now? Let's talk about VantageScore. This is the newer kid on the block. Created in 2006 by the 3 major credit bureaus Experian, Equifax, and TransUnion. They wanted to compete with FICO and create a more consistent scoring model. VantageScore also ranges from 300 to 850, and the current version is VantageScore 4.0. It's designed to be easier to understand and more consistent across all 3 credit bureaus. Here's where VantageScore shows up in your life. Free credit monitoring. Apps like Credit Karma, many bank apps, and credit card apps usually show you VantageScore, not FICO. Why? Because VantageScore licenses their scores more cheaply to these companies. This is where personal budget planning gets tricky. You think you're monitoring your credit, but you might be looking at a score that lenders don't even use. This is financial education that saves you from surprises. VantageScore is useful for tracking trends and catching errors. But when it comes to actually getting approved for a loan or credit card, most lenders aren't using it. This is debt management. Reality. Know which score your lender cares about. Check your credit monitoring app right now. Does it show FICO or VantageScore? Look in the fine print. Most people don't know. 3. Why are FICO and VantageScore different? So why do these 2 scores show different numbers for the same person? Because they calculate your score using slightly different formulas. Both look at the same 5 factors: payment history, credit utilization, length of credit history, credit mix, and new credit, but they weigh those factors differently. 4. Example, FICO puts more weight on credit utilization and payment history, while VantageScore looks at recent credit behavior more heavily. Let me give you a real example. Let's say you have a high credit card balance, but you've been making on time payments for years. FICO might penalize you more for the high utilization, but VantageScore might be more forgiving because your recent payment behavior is good. This is why you can check Credit Karma, NC 720, but when a lender pulls your FICO score, it's 680. This is personal finance management that requires you to understand the game. You're not crazy. The scores are just calculated differently. This is financial literacy that prevents panic when you see different numbers. When you're serious about budgeting for beginners or advanced credit building, you need to know which scoring model your target lender uses. Have you ever been surprised by a credit score a lender pulled? Now you know why. It was probably a different scoring model. 4. Which score do lenders actually use? Here's the bottom line. Most lenders use FICO. If you're applying for a mortgage, the lender will almost certainly pull your FICO score, usually FICO 2, 4, or 5, from all 3 credit bureaus, and they'll use the middle score. If you're applying for an auto loan, They'll likely use FICO Auto Score 8 or 9. If you're applying for a credit card, they might use FICO 8 or Bank Card Score 8. The point is, FICO dominates the lending industry. VantageScore is used by some lenders, especially newer fintech companies and some credit card issuers. But it's far less common. This is where financial planning gets practical. If you're preparing to apply for a mortgage or car loan in the next 6 months, you need to know your FICO score, not just your VantageScore. This is money management that prevents disappointment. Don't assume the score on your free app is the score your lender will see. This is saving money in the long run. If you know your real FICO score, you can work on improving it before you apply, which gets you better interest rates. This is personal finance management that actually impacts your wallet. What's your next big credit application? Mortgage, auto loan, credit card. Find out which score that lender uses before you apply. 5. How to check your FICO score and why you should. So how do you actually check your FICO score? Here are your options. First, many credit card issuers now offer free FICO scores to their cardholders. Check your credit card app or online account. You might already have access. Second, you can pay for your FICO score directly from myofficio.com. It's not free, but it's the most accurate way to see exactly what lenders see. Third, some banks offer FICO scores for free to their customers, even if you don't have a credit card with them. Here's why this matters for personal budget planning. If you're about to make a big purchase that requires credit, you need to know your real score. Checking VantageScore on Credit Karma is fine for tracking trends, but it's not what your lender will see. This is financial education that prevents surprises. This is budgeting for beginners who are getting serious about their financial future. When you understand debt management, you realize that knowledge is power. Knowing your FICO score before you apply means you can shop around for the best rates, negotiate better terms, or wait and improve your score if needed. This is financial literacy that directly translates to money saved. Do you know where to check your FICO score for free? Check your credit card apps right now. Many offer it for free. 6. Which score should you focus on? Here's my advice. Monitor both, but prioritize FICO. Use free tools like Credit Karma to track your VantageScore and watch for errors or suspicious activity. It's great for catching identity theft or mistakes on your credit report. But when you're reactively working to improve your score for a specific goal, like getting a mortgage, buying a car, or applying for a premium credit card, focus on your FICO score. That's what the lender will see. This is personal finance management strategy. You're not ignoring VantageScore, but you're being smart about where to put your energy. If your VantageScore is 720 and your FICO is 680, don't celebrate yet. Work on getting that FICO up, because that's what matters for most lending decisions. This is money management that's strategic. This is financial planning that aligns your efforts with real-world outcomes. When you're serious about saving money through better interest rates and credit approvals, you focus on the score that lenders actually use. This is budgeting and credit building that's practical, not theoretical. Starting today, which score will you monitor? If you're applying for credit soon, make it FICO. If you're just tracking, VantageScore is fine. Look, the credit scoring system is confusing. It's designed to be confusing. But now you know the truth. FICO is what most lenders use. VantageScore is what most free apps show you. They're calculated differently, which is why your scores can vary by 30, 40, even 50 points. Don't panic when you see different numbers. Just understand which one matters for your specific goal. If you're applying for a mortgage, an auto loan, or most credit cards, FICO is what matters. Focus your energy there. Check your FICO score. Improve. The factors that FICO weighs heavily: payment history, credit utilization, length of credit history. That's how you get the approvals you want and the interest rates that save you money. You're not powerless in this system. You just need to know how it works. Drop a comment and tell me, did you know there were 2 different credit scoring systems? And which score do you check most often, FICO or VantageScore? Let's help each other understand this better. And if this video cleared up the confusion, hit like and subscribe to Liberty Money. We're dropping new content every single day to help you build financial literacy, understand credit, and build real wealth. Thanks for watching, and I'll see you in the next one.